What's up, homies? How are we doing? Can you check the sound and is everything else okay? Hmm. All right, great. Well, welcome, guys. Welcome to the stream. For those who don't, for those who don't know me, I'm Jack, Bitcoin Jack. It's been a crazy few days, huh? I'm kind of recovering a little bit from some celebrations last weekend, so I might be a little bit slow. Hope you guys are good. We're going to be talking today about whatever is happening with Celsius, and I wanted to talk about real estate. We're going to talk about it a little bit, but I think next week we're going to, talk about it even more. So maybe every week we just create a little subsegment on the mortgage rates and the stress that's visible in the housing market. And then I think we should talk a little bit about how bad this market can get. So where it's going to bounce and, whether that's going to be the bottom or, things could actually get worse. So I think we should start with the whole Celsius thing, right? It's on everyone's mind. Let's see what chat is saying. All right. Yeah, I'm wearing a holiday shirt. It's actually getting pretty hot now in Holland. It's going to be like 30 degrees Celsius on in the weekend. So I'm kind of trying to get ahead of that. All right. Anyways, so I think I posted this this thread couple of weeks ago, May 20th, so almost a month ago, 3 weeks ago, and it basically talks about the intersection of the different components of the current market. Basically, we have DeFi, we have CeFi, we have the Fed hiking and tightening monetary policy, which takes out liquidity from the market, and all these different positions taken by different entities, like Saylor, for example. He's getting pressured, but there's all these other market participants like Cathy Wood and whatever that at some point will have to feel the pressure of the market. And one of the things I mentioned was the intersection between, for example, a company like Celsius right here, who run a partial fractional reserve, and they were involved with Luna. They were involved with pretty much everything in the DeFi space, where they were trying to get yield so they could attract customers who then give them more capital with which they would earn more money. And they were all fighting for business. And now Celsius is going under. But I do think that when you think about it, when there's smoke, there has to be fire. And, is this limited to Celsius? Are they the only stupid party who got themselves into liquidity problems where you have all these liquidity pools and there's, not enough assets to actually back all the other assets when everybody comes for a bank run? So essentially, to me, the whole Luna thing was a Lehman Brothers moment. And I talked about that. I mentioned the idea of it being a Lehman Brothers moment, and it hit Celsius, but it must have been hitting Crypto.com as well, because they were, changing their yields and changing their prospectus. It must have hit funds like 3AC and other parties. So it's like a dominoes that is going through the entire space. And then a lot of people said, well, there is not a lot of reason to believe this would be essentially, necessarily bad for Bitcoin. But then you realize how much red Bitcoin exists in the DeFi space, which is part of the collateral equation. If Bitcoin goes down and it's in the portfolio of, large hedge funds or on the balance sheet of some public companies, etc., and everything goes down, then people will have to start selling assets to cover their assets. Is it going to be Bitcoin or something else? Doesn't matter. If something is liquid, they will find and try and get a good price for it. And if something is not liquid, ideally they do not sell it. But then you get to the point where you get forced liquidations. There is, so I advise reading up on this thread. It doesn't necessarily specifically target, one company or anything, but it just gives you an idea of how, the things that we can see and the things that we cannot see, that we can assume may be happening. And if there's a lot of things that we may assume happening, maybe not all of them will happen, but some of them will happen, and then they kind of, collapse into each other. And it's basically what we've been seeing for the last couple of weeks. This is another thread on Celsius that I advise people reading, so you can go back to it after we're done talking. But essentially, it talks about the structure of the liquidity and solvency of Celsius. And like I said, I don't think Celsius is the last of it. And they got some on-chain liquidation price for their Bitcoins, and there's probably a bunch of people who are getting liquidated on their ETH positions. And then the question is, how much liquidity is going to be in there? How many participants are actually going to be buying or providing liquidity into a system that is doing the opposite of what it was doing initially? Initially, we were buying shit, and then in return, in reward for locking that shit, we received more shit, and then we would, buy more shit with that shit to lock more shit to get even more shit. And we kept on, collecting a lot of shit that became more expensive because new participants were coming into the market. Basically what we're seeing is the reverse of that. We're selling shit to unlock more shit, to sell more shit. And then at some point, it depends, who is coming last to the pool and claim their shit. And at some point, we find out there's actually not enough shit. And then that somebody really goes bad. Does that make sense? Yeah. Okay. So where does that end? Obviously it's difficult to say, but let's assume that whatever is on the screen right now, liquidation price 1,600, 8,000 is, they're going to liquidate $1 billion in Bitcoin on chain, in DeFi. Okay. Well, is that going to bring us to 12,000, 14,000? Generally, when these kind of liquidation cascades happen, it's a good moment to buy if you are if you have a lot of money and you need to scale into Bitcoin. You don't want to do it when price is going up, essentially, because you're going to get a higher and higher price. So you want to buy into forced selling, because then you don't have the slippage, and yet you can deploy billions of capital into the market. I don't own billions of capital, so I don't have that problem. But larger players, like huge players, they kind of have to use these moments to get into it. So at some point, there's going to be the cascade's going to be over, and it doesn't tick anyone else. It doesn't cascade anything further than that. And that's generally where we're just going to fill up the entire void of the liquidation cascade. So is it going to be 1,600, 8,000 where we liquidate and then, wick to 12 or 14? Could be. And this is another tweet. I'm sorry for going over tweets of other people, but it kind of fits the bill here. How, there's a bunch of people getting really badly pressured on the DeFi when it comes to ETH, and then you have all these other, wrapped versions in different liquidity pools, and at the end of the day, it could become a really shitty situation. Man, let me drink a little bit. I'm dying here, guys. I'm sorry, but I don't know. I don't feel well. So that's kind of the Celsius story. And I know it doesn't give you any specific details further than, kind of trying to explain the mechanics of it and explaining that this is not an isolated event, but probably is gonna create issues for other participants in the market as well. But it's just good to know what the risks are in the. They repaid 30 million. Well, we're gonna see how that story develops. I mean, I think the big question is, did they get to the point where, so they froze withdrawals. So basically, they're afraid of a bank run. Now you cannot withdraw, and now maybe they will reinstate that. And then the question is how fast, and how much is going to get withdrawn, and is that eventually going to cause the issue? Would I trust my money in Nexo? I haven't researched Nexo, but this is let me use this as a segue into our sponsor, Ledn. So basically, Ledn is a competitor to Celsius, and the big question now, is here. Okay, so I'm kind of shitting on whatever Celsius is doing, and the good thing to realize is that it's all about transparency and about security and a good product when it comes to these kind of things. So the first thing that you want to know is actually be able to kind of figure out where does your service provider get their yield from, and how much assets do they actually have versus what they should be having. So being able to look into that is something we should demand from those service providers. And I've been working with Ledn for a while now, and they're trying to I think they're relatively, compared to their competitors, they're doing a good job because they have proof of reserves and everything else. And basically what Ledn is as much as Celsius is kind of like a digital savings account where you can borrow for for an interest rate, and you can actually get interest rate on whatever you save. So thanks, Ledn, for sponsoring, and we should, you should really look into them as an alternative to Celsius, because I do believe that they have whatever they need to prove their reserve. So thanks, Ledn, and hopefully this is actually going to be a good thing for Ledn after all this mayhem in the market. Back to my face. I want to talk a little bit about the housing market, okay? Yeah, I will talk about the BOJ, the Bank of Japan situation. I don't have much information on it except that they didn't manage to really keep the pack for a short period of time last night. Liquidation now is 15,151. That's interesting. So basically, the crazy thing about this whole Celsius thing is that they're depositing into the positions to make sure they don't get liquidated. So, but basically they're adding to losing positions, right? And if there's generally one thing that you don't want to be doing is adding collateral to losing positions in a downtrending market. I mean, I've done this for 5 years now, and I started margin trading in 2018. And the first thing that the market did to me was, you liquidate 2 accounts within the first 6 months of trading margin. And that was me adding to positions that were underwater, trying not to get liquidated, instead of just, closing, take the losing position, instead of adding collateral against the market trend. Like, markets will just go on and try and liquidate that, because they're designed to steal your money, and the more you add, the bigger the target becomes, the cheaper assets the other party who has the financial ability to pressure those positions actually gets. So they just get more money generally. Have I deployed capital at current prices? No. I don't see any reason, with financial conditions still tightening. We're going to talk about that in a bit, okay? Let me move forward on housing market, and then after housing market, we're going to go to the Bitcoin / macro, summary, where I'm trying to make sense of, how to be patient and why to be patient. I'm gonna come back to the bottom question, okay, guys? So, oh my god, this chart, it's so beautiful. I feel like, yeah. Now we can at least see some prices. Mortgage shit. I believe I have a few charts. Okay, so let me start with the fact that interest rates at the central banks are going up, right? So we can look at, for example, the 2-year yield and the longer term yield. They're going parabolic. So essentially, inflation is really high. The bank is raising those interest rates, and then, rates go up. So people have to pay more to get a loan. And this is driving interest rates on mortgages. Basically, I think that interest rates on mortgages are, central bank rates plus the profit margin plus the risk premium. So, how likely is it that people cannot repay or pay the debt they have? And the whole story so far has been that the reason why houses got more expensive is because there was very little supply. Everyone was able to refinance their homes at very low interest rates when interest rates were near zero. And a lot of people just bought a second home, or the home they had, they could remortgage it and then build, make it double the size or 50% more, bigger. And now I think that rates going up is just going to kill demand, or, it's going to create a supply shock in the sense that people will have to start selling houses because they cannot, buy them any longer. If the rates go up, you can buy a smaller house, or prices have to come down. So the question whether, we're going to actually see more houses on the market, I don't know. But if, for example, if there's investment companies that start to lose money because they not only own houses, but they own other equities and other shit, and they have to liquidate. If they can find buyers into it, they will sell it. So I do think there's going to be a supply shock, and I do think that people won't be able to buy, those expensive houses anymore. So it makes sense that if this continues, if the short-term rates and even the longer-term rates, keep soaring, the housing market is completely going to collapse. Or, in my opinion, in that sense, in a housing bubble similar to 2008, where I think the 30-year mortgage rate right now is kind of pushing towards levels we had in 2007, but we have way more debt, right? So that's going to collapse, like, in my opinion. And whether that is because demand is going to get killed or suddenly we have a flush of supply of houses entering the market, as long as the Fed is going to keep raising, raising rates, it's gonna come down, and it's just going to be this similar thing as we're seeing with Celsius or the crypto market in general. It's all interconnected, and if you pull the liquidity and you have, we used to literally low interest rates allowed you to buy a house, and then later when interest rates were even lower, you could use the surplus of the value of your house, shit, quote unquote, to lock it again and then buy more houses, right? And now it's the other way around. So we're kind of in this big deleveraging moment, not just in crypto, but we're in a big deleveraging in the world economy, which is going to overextend to the downside. So I think there's opportunity eventually, but you want to get this, you want to wait until you can really see the damage being done. And I think these are just the tiny first cracks in all of that, if that makes sense. They may sell those houses in package deals and never touch the market, but when liquidity dries up, there's going to be, people will have to try and see whether they can actually, where to find liquidity. So anything that's liquid will eventually be very, it's going to be worth a lot for having, in the sense that you want to sell it. As long as it's liquid, and the entire market is looking for liquidity because liquidity is, vanishing, you're going to try and sell that what is liquid, I guess. Let me just... Percentage-wise, what drawdown do you expect on houses in the Netherlands or the US? I don't know, man. This is a question, obviously, that I would like to answer, and I could try, but I'm probably just going to sell you bullshit if I do. Maybe I'm going to have a better idea on that later on, but I think at this point, it just doesn't make a lot of sense for me to say anything about it, but probably similar to 2008. So if you have any charts on that, I think the drawdown back then was 30%, maybe 25%. Well, so there's one more thing when it comes to housing, is that obviously lawmaking is going to be very influential. I know, for example, that in the Netherlands, they're looking to create fiscal policy or change fiscal policy. Fiscal policy has been very supporting to, keep high demand in houses that are short on supply. And right now, I think what they're going to do is limit the middle class houses into a point system where rent cannot be more than a certain amount of, if it fits that kind of luxury / whatever you're renting is enough. And I'm pretty sure that's going to be reason for investment companies who buy houses to actually rent them out. It's going to make them sell as well. And I think that's a different, that's something they didn't do before. And I wouldn't be surprised to see that kind of stuff happening in other parts of the world where the inflation is getting really high and people are actually starting to struggle to, live a modest life and be able to pay the bills at the end of the month. So, all these kind of weird policies that, on one side are trying to move the market up for tens of years are now being reversed. I don't know if I don't know if it's fair to do it, but probably what they're going to be doing, and then it's just going to dump. Yeah, I don't know about the 3AC story. Like, is there any like merit to it, or is it just a stupid accusation? Right? Is there any like real news on it? So why wouldn't they take out loans with housing as collateral instead? Because the loans are, getting more expensive. Some of them will be able to do it, but others will actually create a very high leverage situation relative to what they were used to, which they may survive, or the market is going to come after them, and they will actually have to be forced to sell. And there's definitely going to be parties who have so much debt that cannot afford this. All right. Well, guys, I don't know. Like, if you have any more question on housing, I would love to answer them, but I'm just not an expert on it. Right. The only thing I can theorize here is interest rates go up, house prices come down, and then something is going to happen, and hopefully people will be able to actually keep paying them their interest and keep paying their rent, etc., etc. But if that's going to get pressured through inflation and higher rates, you certainly have to take into account there's a certain risk associated with that. And okay, so we can go into mortgage bonds here, right, and see they're just not having a good time. So 10%, I don't know. The problem here is that pretty much all these charts do not have any data for like 2000 to 2008 because everything kind of blew up, which is sad. Then there's probably a big difference with regions in NL or any other country, since Amsterdam, Utrecht city center is a whole different dynamic than rural areas or medium-sized cities. Yeah, I mean, obviously, there has to be a difference in I mean, at least for the pricing part, I know that things were more, going up a lot higher in city centers. But eventually that also pressured for prices outside of the city center, because all my friends, they started leaving the city because they couldn't pay for a house. So they just went into the rural area. And then all the people who were living in the rural area no longer can live in the rural, in that same area. I don't know what level to expect for the crypto market, guys. Like I cannot look into the future. But let's dive into crypto, because I'm kind of done with the mortgage fucking thing, and it's just something I need to research more. So we talked about the FOMC meeting into CPI data last time causing the sell-off. Well, we had the CPI data on the 10th. Right here, it was way higher than expected, 8.6 instead of 8.3% year-over-year inflation. And tomorrow is the FOMC meeting, so maybe there's going to be something good there tomorrow. I don't know, but both times very fundamentally driven downside selling, because the Fed, again, guys, and CPI data are not good. So I don't think that this is going to, if you combine that with the structural systemic risks involved in crypto currently, of people who are getting under pressure when it comes to liquidations, this is, I don't think this is the bottom. So I do think, if we zoom out, this market is going to be able to sell off into 19.5, which, I mean, it got very close, like 21k, 20.8. I do think that we can go as low as 19.5 before the 20th of June. And I think at that point we just have to see a bounce. I think everyone's going to be really scared at this point that we're going to be, that we go after liquidating, you know, Celsius. Oh shit. Sorry guys. The chart fucked up. Yeah, 75 basis points is absolutely priced in at this point. I 100% believe that. So if we're not going to get a 50, you know, if we're not going to get a 75 basis point rate hike, we might actually see some relief into the, you know, after the FOMC tomorrow. What I do believe is that at this point the market is really scared. I do believe that the narrative on Celsius and liquidation levels is something that people, you know, it's going to make people scared to actually buy. I think prices may actually eventually get there, but it's not going to happen right now because, you know, A, you're scared to buy. B, this is a very long-term level that we're touching for the first time. So, you know, chances that we do break through here without any bounce, I think it's just slim. So maybe, you know, maybe you can get as low as 18 or 17 and a half or whatever. Ideally, we touch 19.5 and then have a relief rally after the FOMC tomorrow or next week into some kind of relief. And then I do think that, you know, if the economy is not getting better, the inflation is not getting better, we're going to have this prolonged bear market into Q3 of this year. So in my opinion, I think the odds of a bounce, you know, here or very close below the current prices, it's just you know, very good. There's a good chance that we're going to bounce. And if we bounce from, you know, the level here, I do think it's going to reach into, you know, the wick here, like 20, 25, 26. It's kind of where I'd expect price to get stuck and then come down and, you know, retest the demand side of things. Ricky, I believe that Sailor liquidation is lower than 6K, but you can check the numbers for yourself. Real panic will begin when the first weekly closes below 16K. I mean, if 16K doesn't hold, there's you know, there's some levels to work with. But generally, you know, I think the most important levels to the downside is actually this one here. If we lose the 20K region, there's obviously going to be some kind of reaction here, maybe, you know, between 16 to 17 and a half. And if you go through 16, I'd say you're right that it does go into the zone here. So 10 to 14. Yeah, I'm pretty sure JV in the chat is correct on that liquidation price. But we're not there yet, guys. Like, if at all, it's going there. Anyway, so Bitcoin market mayhem. Like, I don't, you know, I think this is a level where we're going to see some relief and some bouncing around. Is that where my buy area is? Dude, I don't think I necessarily have an idea where this market is going. So far, my reasoning is to let the Fed do the work. There's going to be bounces, so maybe I will play some of it to the upside. But for me to get like a large trade-in or like a large, you know, like all-in kind of moment, it's going to take a lot of liquidations, and I haven't seen a lot of them. B, some kind of a chance on the Fed, you know, at least slowing down the whole pressure on the market thing. And I think at this point everything is correlated to each other. You know, like I think this could be one of the biggest crashes the equities market has ever seen, but it's not going to happen tomorrow, right? It's not going to lose 50% overnight. The S&P 500. So everyone's constantly asking where to buy, when's the bottom, and honestly, my opinion right now is that sounds stupid, but I don't really care yet because I haven't seen anything that gives me the idea that we had like a full-fledged capitulation liquidation kind of event yet. Well, it's not bottomless, but it's, you know, it's just something in progress. Everyone always thinks that markets are these, you know, that we make all these kind of predictions into the future and then say, okay, well, you know, that's where we bottom. And I think at this point, there's so many little different moving things to the market that it's just stupid to constantly be questioning yourself where it's going to happen, because all we can do is guess. So I'd rather get into, either I get the situation where I'm looking at the market and I'm like, whoa, I have to buy now because of what's happening, how much liquidations are happening or whatever. You know, when I was in the market back in 2020 March, that was a very obvious moment to me, but I couldn't tell you it was going to be at 3K or 4K or 5K if you asked me 2 days before it happened. Like, do I think there has to be a big liquidation event for us to bottom? Well, generally that would be something I would prefer to happen. Ideally two, where you have like several events after each other that kind of, you know, kill 95% of the participants in the market. That just generally is a really great, well, not a great, but a good sign or a good indicator that there's room there's not a lot of room left for the market to go lower. It could end up going sideways for half a year inside a certain range, and if that results in enough people kind of selling into stronger hands, yes, I mean that could be the bottom as well. What is the nerve that 75 basis points is priced in? I think when the CPI data hit at 8.6 instead of 8.3, people started pricing in 75 basis points because they believe that the Fed may actually be more aggressive. What's up, Nick? Yes, Rebecca, I will update it at, you know, I always say as soon as possible, but I'm a busy man, so I'll try. And, you know, I forget a lot of things as well. Feds have already lost control of inflation. Yes and no. Like, they have no control on generating supply as they can generate and conjure liquidity. So they can do something on the demand side, which is also taking time. Like, you know, you need to hit people in their pockets before you kill demand. That's actually a good question, Alex. What reclaim upside level could be a buy, assuming it reverses here? Let me get a clean chart here. I'd say, but that's a, you know, it's a very slow indication. I'd say that any reclaim, you know, way past the 30, you know, let's say anything above 32, essentially the weekly level here and the weekly level here, the weekly close levels. If you kind of manage to, you know, do this, I think you have trend continuation. But fundamentally, thinking about it, what's currently going on in the world, and, you know, don't fight the Fed. This is a very unrealistic situation. So I do think, in my opinion, that 25, 26 is the upside cap. And, if you want it short, in my opinion, it would be, you would be lucky to get 30. What is your new PC build off? What do you mean, man? Like, is it made from chips? Yeah, it's made of computer chips and a case and other things. It's also made of spaghetti, yeah. My computer runs on spaghetti. Because, I don't know. The recent structure cannot be undone. I don't know what that means, man. Like, what cannot be undone? Let's go to ETH, man. Like, okay, let's run over the Dixie. We talked about this endlessly, how this has to be going up, especially when inflation hits high and when we saw the euro dollars skyrocket. By the way, it's at 3.3% the euro dollar. So this is moving into, I think, continuation, future targets in the months to come. In my opinion, sit at 114, which is, I know a lot, but I think this is my target there. Yeah, I agree, Antonis. I think that the lower we're making here is continuation of further downside on Bitcoin. Man, and this is painful. This is probably, I don't know, but this is the bull market, guys. I outlined this on Twitter a while ago, this being a key level, and it got rejected so hard, and it's just losing. The bull market is just utterly collapsing. It's losing a 22-year kind of trend line. This is bad, really bad, and I don't know if the Fed is going to do anything to keep this afloat. So tomorrow is going to be so important. This essentially, to me, means, when I read this as a technical analyst, it almost screams that it has to unwind this entire structure, like, which is insane. But it would drop back to 500 basis points below par, which is 100, or at least these lows here, if you have enough time. How important is the next halving cycle? I think pretty fucking important. So I do think, by that time, there's going to be a bull market again in Bitcoin. Yeah, guys, just, there's like 100 people if you're here, and I only got 31 likes. What's going on with that? Like, you don't like me? So yeah, dollar that way. And then the other thing that I said was gold down the drain, because rates higher, real interest rates. Oh shit. Rates higher, real interest rates higher, real rates higher, and then eventually people may actually start selling gold, for the simple reason that gold is in an inflation hedge, and then if you can get more new bond auctions, because the rates are going up, you're going to be selling some of your gold. And then the other thing is that if you own a stock portfolio or whatever, and you also have some commodities and everything is going down, you're probably going to rebalance some stuff. So it's just probably going to follow. So I do think that this is going to see some follow through. Thanks for the likes, guys. Immediately 20 more likes, which is super. Like, I like it. Atif, I'm not gonna tell you what to do here, man. Like, someone asked me, like, have you deployed any capital here, in a sense for like long term? My answer is no. Could I be wrong? Yes. Do you make your own decisions? Absolutely. Do you know? At some point, I'm gonna scream when I deploy my cash into the market, and then I could also be wrong. It's not here. It's not today. You know. There's a difference in trading the market and getting like small risk positions versus, you know, emptying my cash reserves into a long-term quote unquote investment. And you know, I'm not ready for it. I just don't see why today was the day, and for what reasons. You know, I do know what reasons I want to see, and I'm not seeing them. So, like I said, guys, I'm dying here. I'm gonna do 2 more minutes. What is the last thing you guys want to see before I jump off? Oh yeah, dudes. Let's talk about GBTC. I like that. Because holy shit. Look, I think GBTC is going to be an important indicator whether this market is actually bottoming out, okay? I believe that there is a 640,000 Bitcoin sitting in the fund, trading at a 27%, 28% discount. You can see the discount down here. And then I did a little bit of charting here where the colored bars are the price of GBTC when they would actually, you know, be valued 1-to-1 with the underlying Bitcoin. 640,000 Bitcoin, you can calculate how much that is worth today, but that has to be arbitraged before this market goes up, right? So in the case that we get a GBTC ETF, so it gets converted, then obviously everyone's going to sell some Bitcoin and long GBTC and close the gap. So there's quite a bit of sell pressure because, you know, it has to meet halfway. I do think, however, that once we start seeing, this kind of get closer together, it's going to be a bullish sign because it's some of the pressure in the market is gone. Because right now it's 640,000 Bitcoin at a 28% discount. I think that is some future sell pressure. July 4th, yeah. Or isn't it's the 5th, right? The deadline from the SEC. I don't know if there's a chance of an approval in July. It's actually something I haven't really been paying attention to because even if it gets approved, in my opinion, it's a bearish thing, and if it doesn't get approved, it's probably also not a bullish thing. I'll look into it and ask around because I know people who know this kind of stuff way better than me. I think you can buy GBTC, bro. I think you can. You just need to check with your broker or your bank. It's essentially just a stock. Yeah, Ricky, I do think that an approval of a GBTC fund is initially going to be slightly bearish because we need to ARB the 28% discount that is currently at. Dude, everyone lost money at TIFF, and you know, my opinion is not gonna help you make it back. Like, I feel sorry for your loss, but you're gonna have to come up with a strategy in a way. And my opinion is not, you know, if you're just gonna punt your entire portfolio long or short, based on my opinion, with 10x leverage, you're just gonna lose it, right? I think I'm gonna try and get some rest and recharge a little bit. This was very cool. Guys, check out Ledn, and I hope to see you next week. If there's anything that we should be talking about, I think we're just gonna keep on covering these things that we've been talking about, and then every time try and get some more detail into it. But if there's new subjects, please let me know on Twitter. And it's been, you know, it's been cool. Second video. I hope they're gonna get better and better. And I appreciate you being here. Give it a like, subscribe, and, you know, cheers. Thank you. Love you all. Peace out.